How's everybody doing? This is Bob Ichino from Path Trading Partners, along with my co-founder Mike Arnold. And as promised, this is the Rotation Zone Part 2 for trading crypto and traditional markets. I mentioned this in a lot of our daily YouTube updates. We trade cryptos the same way we trade traditional markets. The price action tools that we use and the price action strategies that we use work in cryptos, and I would say, at least in the short term, arguably better. Of course, past performance is not indicative of future results. But let's get started with this part 2 that we promised you on the rotation zone, or the R zone. First, a quick review. In the last video, we looked at the concept of where rotation zones tend to occur just based on price action. We then looked at the concept of building a rotation zone, or R zone, based on moving averages. If you haven't seen our moving average videos, you probably should watch those before you watch even part 1 of this, but part 2 especially. We examined the additional moving averages we put on our charts, and finally, we started to examine the concept of when the R zone is valid and when we ignore the moving averages that make up the R zone. So let's start this part 2 with combining R zones. So again, in the last video, we examined how rotations can set up in areas near broken trend lines, significant levels, and support and resistance in prior areas of consolidation. Okay, remember, kiss the trend line goodbye was the broken trend lines, significant levels, support becoming resistance, etc. Many of these rotations, however, can also fall into just simple support and resistance types of entries. Our research shows, and we don't teach you anything that hasn't been researched, that these vanilla entries are not good enough for risk-conscious traders due to lower probabilities. The highest probability setups come from the combining of a price action R zone with the moving average R zone. So combining R zones. Combine any of the following 3 R zone areas: near breakout or breakdown levels of sideways channels, especially defined by significant levels, retest or return to broken trend lines, which you know as the kiss the trend line goodbye, near areas of prior consolidation, especially with significant levels present. Combine any of these 3 R zone areas with the dynamic moving average R zone for the highest probability R zone entries. All right, so let's talk about combining the dynamic R zone with a breakdown or a breakout of congestion above a significant level. So here you see some price action. It moves up and it forms a sideways channel. These are significant levels. We haven't talked about those yet, but don't worry about it. They're essentially stronger support and or resistance. We get a breakout above, and as you know from the videos, resistance becomes support, especially if it's a significant level. We get a breakout above, and then you get a move down, and you notice that the dynamic R zone, or the moving average R zone, is present at the level of support. Prior resistance, now support. This is a very high probability entry. Price action guides along it, rallies up, moves away from it, comes back down, closes higher, and then takes off. This would be a high probability entry because of the combination of the breakout level and the dynamic R zone. Here's an example of a trend line combined with the dynamic R zone. So you've got a path trading trend line, proper trend line. You've got an initiating point, a defining point. We get some price action. It does not break the trend line, but here we get a close below. The next candle moves down aggressively, a little doji candle, and then a rally back up. And what's here? The trend line and the dynamic R zone. When you see those two things combined, this is a high probability short signal, especially the first time it's testing. We get the break, we get the kiss the trend line goodbye inside the dynamic R zone. We have 3 factors pushing the price back lower, and we get an extension down. Congestion, significant levels, and the dynamic R zone. So here's a bunch of examples on the same chart. We've got a couple of significant levels in here. You can see price action tested it there, and then closed below it. That's what's forming this one. Huge emotional candle moving away from the second significant level. We get all the way to the right. We break out into this tiny little channel comprised of significant levels, and we get a move up, and then we get a move back into toward the second significant level with the dynamic R zone present. And there's your move up. It tries it again. Resistance becomes support. We move down, we break through the resistance, but the dynamic R zone is in the way to provide an extra little lift. And here's the move. We've got another significant levels defined by price action off to the left of this chart that's not present. We get a move into the dynamic R zone, and the low of this candle touches the significant level at the same time it's entering the R zone. And then look at this run up. Same thing here, move down into the R zone. Now we're through the R zone, testing the significant level. We immediately get a move back up, and then it finally breaks. Now the reverse is starting to happen. We've got a little bit of an up move here, and we've got a test of a significant level inside the R zone. And again, these are just sort of structural times where the dynamic R zone is moving and it happens to cross with significant levels. Price action goes in there, up there, falls pretty dramatically. So this is a combination of congestion, significant levels, and the dynamic R zone shown multiple times on the same chart. There were multiple high probability entries on this particular chart. Dynamic R zone and Gann levels. So dynamic moving average R zones can be combined with the Gann levels to provide additional reinforcement to the dynamic R zone. The probabilities of these R zone trades go up when the reversal happens close to a Gann level. The most common Gann levels for trending markets are the 25% and the 37.5% retracement level. What we mean by that is the ones that are used most when you're going with a trend, and the ones that end up being the most powerful, especially when combined with R zone levels, are the 25% and the 37.5% retracement levels. So here we have an example of the dynamic R zone combined with Gann levels. So again, R zone pushing the price lower. You can see 8 pushing the price here. We get a turn, we get a cross, breakout above. No significant levels here, no prior price congestion, nothing like that. Now we get up a little bit in price action, and here we have the 25% Gann level. The market pulls into the R zone and hits the 25% Gann level, and you don't get an immediate aggressive move, but this is definitely a move away from that Gann level. 8 is pushing the price higher. We keep dipping into it, and it just starts to rocket higher. This is a great example of what tends to happen. The market is very averse in a trending situation, and you don't know a trending market until you see it, until the trend is kind of established. But here's kind of a good view when you see the 25% Gann level and the market turns into it and moves away from it, that it's going to have a very difficult time reversing trend in such a short stretch. Here's another example of a dynamic R zone and Gann levels. Again, you can see the Gann level measurement. We get down, get below the R zone. The R zone is definitely very angled and wide. You get a move up into it, and here's the 37.5% Gann level. Again, the market moves up and rejects that level pretty significantly and then follows with an emotional candle lower. This is a high probability short for us. The dynamic R zone is slanting down, it's wide, and the 37.5% Gann level fits right into the R zone. You see it a little bit here as well, but this is really the key move because the market is trying to reverse trend and is just not able to. You get this emotional candle push lower. These are two great examples of dynamic R zone and Gann level combinations for high probability trade entries. I'm going to turn it back over to Mike to go into the first cross part of the presentation.
Thank you very much, Bob. So the first cross, some traders trade moving average crosses, and we talked about that in our moving average video. We do not trade crosses, but we pay attention to them in conjunction with price action. So we notice where they cross, and then we notice the price action is happening around them. Frequently, a moving average cross will occur in conjunction with price breaking out of congestion. The first cross rotation zone is very powerful and can result in areas from which to initiate a trade. Remember, the first cross is not a signal for an entry. Other conditions have to exist for a valid trade. So sometimes the first cross will form from a very narrow R zone and will line up with another price action R zone. Other times the price will trend for a bit before returning to the first cross rotation zone. Either way, the first cross rotation zone is a powerful location from which to look for a trade entry. Let's take a look at an example. So we have a horizontal channel, significant levels, or you could just work with basic support and resistance. We get a breaking out of there. We get the first cross the rotation zone right here. Price also retests the breakout zone. So this is prior resistance becoming support, pulls back to the first cross area, and then moves higher. It also kisses the trend line goodbye. So there's a bunch of different setups here. When all combined, very powerful setup together. Again, breakout from the horizontal channel, close above a trend line, return to the breakout zone, first cross area setting up a first cross rotation zone. Here's another thing. This is the first cross happening in a sideways channel, which doesn't mean we're buyers in there because we need the price action. Price then breaks out from this horizontal channel, gets above it, retests prior resistance becoming support, and the rotation zone, which is moving, separating from the first cross area. That's the great pullback entry. We also have a concept called R-zone pushing price action. Sometimes, especially during slow market conditions or overnight sessions or any time that there's less traders active. So after making an emotional move in one direction, instead of price retracing into the dynamic R-zone, price will instead move sideways until the R-zone catches up. At that point, you can watch for a continuation move in the direction of the original emotional move pushed by that dynamic R-zone. So what do we mean by that? Here we have price collapsing very rapidly. We have the first cross R zone moves sideways, and finally the rotation zone catches up and starts pushing price lower, and then price breaks down from this horizontal channel again. And even it's not on this chart, but if you drew a line at the bottom here, we then come up, retest that breakdown zone into the rotation zone, and then head lower. But this would consolidate. It moved really fast, and now we need to wait for the rotation zone to catch up and then push the price lower. Violation of the R zone. Just like with a significant level or a support or resistance level, price action can slightly violate the rotation zone. This is especially true during very slow market conditions or overnight trading. When the R zone is violated, we need price to demonstrate that it's still potentially trending and respecting the R zone. So if bullish trending price action moves below the R zone and then begins to move back up, we do not consider taking R zone trade until price action gets above the upper moving average of the R zone, and that's the most conservative entry. If bearish trending price action moves above the R zone and then begins to move back down, we do not consider taking R zone trade until price action gets back below the lower moving average of the R zone. And that's, again, the conservative entry. You can be more aggressive, but we're just teaching you the most conservative price action to work with right now. So see here, we finally get a retracement dipping below the R zone and then getting back above it. That can be the entry. It could also possibly be, if you drew a trend line down here, getting above the trend line and the R zone. You also notice when this candle closed below the R zone, it retested prior support also. That's combining price action with the R zone technique and looking for the combination of them, and then waiting for price action to get back above the 8 EMA.
Thanks, Mike. In this lesson, you learned a number of concepts using the moving average R zone. Remember that the R zone is useful in markets breaking out of consolidation areas and trending markets. Dynamic R zones lining up with price action R zones or Gann levels are the higher probability R zone trades. So you got your part 2, you've got part 1 and 2 of R zones. Now if you watch our YouTube videos, you should be able to get a little bit more clarity about what Mike is saying when he's pointing to charts, cryptocurrency charts or traditional markets. We also look at futures and stocks. So follow us on Twitter at @path_trading, like our Facebook page. You can always visit us at pathtradingpartners.com, where we have some more comprehensive videos on these subjects. And sign up for the free webinars and read our blog posts there. And also check out the Money Path podcast, which can be found on the website, pathtradingpartners.com, or you can type in the Money Path to Google Play or iTunes. Cheers, guys. Thanks for watching.